forward to. Okay, so you're investing in Norfolk, and let's see here. So this is going to be an example of hybrid approach to real estate investments. So we're going to be using business funding to be able to gap the closing cost and the holding cost for a fix and flip deal. So Carl, so what's I think a purchase price you said around $250,000, right?
That's what I would say, yes.
$250,000 for the purchase. And let's see.
I mean, I'm being probably a little high there on what I would hope it would be, but I just want to make sure that it's there if I need it.
Okay.
And of course, it all depends on it's all about where you're gonna make the money at. I mean, of course, I'd rather get one for 100, but that kind of project is going to be huge around here.
Yeah, a lot of work needs to be done to it. So let's just go with with these numbers. All right. So we I know for a fact that could get you at least $200,000 of a line of credit based off your credit score. The only thing that I'm kind of worried about is the available personal credit that you have to yourself. You have about 4,500, and uh, we match about 5 to 6 times on your personal side. So before I would start with the business funding side, I would ask you to go ahead and ask to increase your personal limits or get another personal credit card. And then from there, we would look at to be around 15K or more. But 15K is a good number to start off with personal credit. Then we could 5 to 6x that on the business side to get you lines of credit, and then do it with multiple different banks and stack multiple different lines of credit. So you could have one line of credit of 75K with Chase, another line of credit with Bank of America at $100,000, and you would stack it up to the point where you had about $200,000 available funds to you to go ahead
Talking
and
about, are you talking about equity lines or are you talking about credit cards?
these are lines of credit, so that it's not based off collateral. We lend three different ways. So it's either going to be on your personal credit, your business revenue, or collateral. We could do collateral-based loans like doing refinances, but this solely is for these lines of credit. It can be based off your personal or your business revenue if you have enough coming in. So the business revenue side, we could get about 50K per bank that we work with. Or if you don't have that much business revenue coming in, then we could get at least about $200,000 based on your personal credit, but it's going to be based off of your personal credit lines that you already have. And we would,
Say business credit, you're talking about my income, or are you talking about this business, starting up a fix and flip business?
if it's going to be on the fix and flip business, then we would use projected, like how much will Carl make with $250,000 in the year 2025. So it's only based on stated income. And then we could get you lines of credit of upwards of $200,000 by using our relationship managers at each bank. So we don't send you directly to a teller or do any type of online applications. We connect you directly with either VP level or a relationship manager at a specific bank. And then they get you higher limits of lines of credit. You take that line of credit, then you invest it into the fix and flip loans to cover down payments or the closing cost, or the holding cost. And then the only holding cost that you have in the overall line of credit is 1%. 1% that's owed on a monthly basis. So let's run through this. Like, we know for a fact I could get you about $200,000 of business funding at 0% interest for 12 to 18 months. And I can show you some examples soon. All right, so you have this available to you as a line of credit, and then your purchase price, let's say for example, is $250,000. Rehab budget you said is around 50K, right?
Yeah.
and then after repair value around 425,000.
400, 425, yeah.
Okay, let's go with 412, 500, just to be in the middle. So you're all in about $300,000 for the purchase and the rehab. Let's see here. So purchase plus rehab plus come on now, is 300,000. And we have a loan product where you could just do closing costs only, or you could do a down payment of about 10% and pay the monthly pay no monthly holding cost. So which one would lean more towards paying no monthly holding costs and a down payment, or uh, no initial down payment and you pay monthly holding costs?
That's where I'm getting confused. The 200,000 you just set up there was 0% interest, so there's no payment on that for 18 months.
It's only principal only payments of 1%. So principal only payments of 1%.
That's
And
2 grand a year and 2 grand a month.
yeah, so that's only if you use the entire $200,000. So
Right.
let's put business funding here and then real estate fix and flip. So these are two separate products, right? Let's first figure out how much money that we would need down to then figure out how much the holding price would be for that line of credit. So on the
You're
business,
saying you're saying it's 10%. You're talking, well, $30,000, right?
yeah, so you can pay because we have multiple different lines. Let's see here. Let me show you. Let me well, let me see here. Stop sharing the screen for a little bit and let's go to. All right, there you go. Okay, so this is one of our flagship products where you don't have to pay any holding costs. It's 100% covered for the purchase and the rehab. And it's only available exclusively in 18 states. And luckily, you're in Virginia, so that fits. So basically, there's no down payments. We cover 100% of the purchase and the rehab, as you see here. But the liquidity is required. So you have to show about 25% of the rehab budget within your account. And then the way we accomplish that is by transferring off the line of credit into your account that 15%. So say for example, or the 25%. So if 25% of $50,000 is $12,500 that you would need to show in liquidity plus closing costs. So yeah, we'll use these numbers. So 12,500, which is going to be 25% of that 50K number. Let's see here. Can you still see my screen?
It's black. It's blank.
Oh, it's blank. Okay. Can you see it now?
Mm-hmm.
Okay. So we just saw a loan product where you just have to show that you have liquidity in your account of about 25% of the rehab budget, which is liquidity needed is 12,500 for the of the rehab budget.
And that's somewhere sitting in a bank so I can have access to it for incidentals, or what is that for? You leave it there for your protection?
For you to do the fix and flip loan, that doesn't require any closing cost. In terms, it doesn't require any down payment for the purchase of the property. It just requires you to pay for closing costs. one of the requirements for that loan is that we would need to see that you have at least 25% of the rehab budget in your account. So you have to have this and then also closing costs, which we
So it has to
calculate.
stay. It has to stay in the account
We don't check on a weekly or monthly basis. It just has to be there when we close on
when
the
we, you know.
yeah.
And then you're saying another 12,500 for closing costs.
Yeah, another 12,500 for closing cost. So for closing cost, it's 12,500. So you're all in, you need to have at least $25,000 of liquid funds to be able to close on this property in Norfolk at 250K, 50K rehab, ARV 412,500. Um, yeah, so you need at least $25,000, right? And then within this line of credit that you have available to you, you'll use, let's say for example purposes, $30,000 because you never know what pops up, 30K. And then within this 30K that you've used off this business line of credit, you're only paying 1% of that on a monthly basis, principal only for the first 12 to 18 months. So then that means your monthly payments monthly is $300 holding costs for just the closing cost. Now you could expect let's say for example the interest payments on this to be about let's say 12%. So what's 12% of $300,000? Let's say I'm gonna do this on my phone because it's a little bit easier. So 12% of $300,000.
It's 3,600, isn't it?
I think you're right. Let me double check. Divided by
I
one
don't know.
times. Yeah, $36,000. So that's on a monthly basis divided by 12. So your monthly holding cost would be about $3,000 for the interest only payments. How fast can you get in and out of a fix and flip deal that you've seen?
I mean, if she got everybody lined up, hopefully have it finished in 2 months and sell it in 2 months, probably 4 months, hopefully 4 months, but that's if everything goes perfectly. And you don't need permits and all this. But I don't know. I haven't done it before. I know these people that do it all the time plan on holding it maybe 6 months at the most.
Okay, so let's go with 6 months. So
But they have crews all lined up. It's vendors all lined up. I'm not gonna be like that at the very beginning.
well, you can be before you pull the trigger. Just get in contact with your own contractors. I'm 100% confident you could probably with your connections that you already have because you're a realtor. The average person, say for example, who's looking to do their first fix and flips, didn't spend the last 30 years um, within the industry working full time. So even if you did like a month of let me sit down, let me heal a little bit, and because I know you're injured, like take some time to gather up my resources in terms of who can get these things done for me. Um, and then you map it out. The holding cost for this will be about half of that 36 grand that we calculated, which would be $18,000 of just um, interest only payments. So
You say holding costs, that's actually the payments you're talking about.
correct. The payments.
300, the 300 and the 3,000 a month. So you're talking about $3,300 a month
Yeah,
in
times
payments.
times 12. Well, no, times six, 3,300
And you're talking
times.
about, so I'm paying $3,300 a month to have this loan.
Correct. And you could essentially do let's reverse engineer this. So I calculate 3,300 on a monthly basis times six, which would be how much time you'll be holding the property for. Worst case scenario, you said about between 4 to 6 months, but we're just going to play devil's advocate and go with the 6 month time period. So 3,300 times six would be about $20,000 of holding costs in general. And you have available to you about $200,000 a line of credit, 0% interest for 12 to 18 months. So let's just say I do need about $30,000 to be able to facilitate this loan. Um, so I would do a balance transfer of, let's say, for example, $50,000, right? Um, just to double it, $50,000, 0% interest on only 1% of that is due on a monthly basis. And 1% of $50,000 is things like $500, right?
Yeah.
Okay. So say for example, I get the $200,000 of business funding. I transfer $50,000 off my line of credit to my personal account. I use this to be able to cover the this holding cost of $20,000 and another $25,000. Well, you're only paying the closing costs because you don't really need to pay this liquidity of 12,500. You just need to show that you have this in your account. So essentially, you're coming out of pocket the closing cost plus the holding cost, and that in total equals about $33,000. But you're pulling out 50K to be able to cover all this. And then your monthly payments on this is only $500. So for $500 per month, and you could pull from this amount, let's say, for example, $500 per month times six is $3,000. So you could pay back your line of credit with the money that you transferred off of it, $500 per month. You'd only be paying about, it's still money that you didn't come out of your pocket with, you know. So we just need to make sure, all right, we figured out that if you have this business funding, you could do this deal and then pay about $33,000 out of that line of credit of 200K. And out of that 30,
Yeah. Okay. So really, mine, yeah, 20 there, 12.5 there, 33,000. So really, my total investment is 333,000. Then you go to sell it for 412. You have 10% to sell it. That's 370 basically.
mm-hmm,
And
you make,
370 minus the 330, you maybe make $40,000.
yeah, $40,000. And mind you, you didn't come out of pocket any money at all. You just came out of pocket. You're just leveraging your line of credit to be able to pay this off. So, yeah, so you're all in the purchase and the rehab. You didn't really pay the rehab. You didn't pay this out of pocket because we're financing this 100%. You're just coming out of pocket the 12,500 plus the holding cost. So you're at 33K. There you go. You got $33,000 of a line of credit, by mind you, to make $40,000.
But so is the 12,000 closing cost, you're saying that's financed too? That's in a line of credit?
Yep, you could use your line of credit to be able to cover the holding cost and the closing cost,
So you're out of pocket actually nothing. You just need 12,500 liquidity somewhere in a bank account
which you could
or
use.
in,
You
or
could,
in credit.
yep, correct.
You need 12,500 in credit somewhere. Nothing else. And you're gonna finance everything. And, but you're at a risk of $333,000.
Yep. And then the hardest part is going to be finding that deal to be able to do this. But you know,
Yeah.
the after repair value, as long as you run your numbers correctly and it's feasible, then you can make that amount of money
Yeah.
off a line of credit.
And how many of these can you do at a time?
Um, I mean, as many as you essentially, if your all in holding cost and closing cost is about, let's say, 35K for math, just ease of math purposes, and you have a line of credit about $200,000, I wouldn't recommend doing like seven of these, or six of these, but because you never want to over leverage yourself too much. But you could definitely comfortably do at least three at a time with about $200,000 of a line of credit available to you. Taking out at least $100,000, 33,000 times three, about $99,000. So taking out about $100,000 out of your line of credit,
Right.
then knowing that your monthly obligation would be about 1,000 to 1,500 on a monthly basis, paying back the line of credit itself, and making sure that these numbers on the left-hand side here are are accurate. That, you know,
Mm. All right. That's okay.
I'm gonna stop recording here now. Let's see here. Pause, stop recording.